Welcome back. Hope you're having a good morning. As promised, let's get straight to Birla Corp that reported a rather good set of numbers. The lower input costs have helped them, and that's why we had the margins improve substantially. What's the way ahead? Mr. Aditya Saraogi, the CFO of the company, joins us on the show. Hi, Mr. Saraogi. Good morning, and thanks so much for joining in. Well, you've scaled down your volume guidance a little bit to around 13% because of the challenges. Could you tell us, is there a downside risk to this sort of a volume target? And also, given that you have capacities coming on stream, you have Mukutban as well that's ramping up. For FY25, what kind of a volume growth are you looking at?
Good morning, Nigel. Thank you for having me on the show. The market conditions have been slightly tepid, while the demand from infrastructure and commercial segment continue to be strong. We see that demand of housing sector, particularly rural housing, that is a bit subdued in some of the markets. So that is why, because of the market conditions, we had to scale down our guidance a bit from 15% to 13% on an annual basis. As regards the next financial year, we will be able to discuss that in the next conference call when we present the annual results.
Okay. Sir, hi, good morning, and thank you so much for joining us. If you can tell us a little more about how demand is on the ground, how are you seeing things shape up? Given that this is an election year, what is your expectation? Just some nuggets.
As I said, the infrastructure and commercial sector demand is quite robust, but in terms of the rural housing demand, it is slightly subdued in some of the markets. So on the whole, the kind of demand that you expect in the fourth quarter of financial year, to that extent, it is not there.
Okay. All right.
This is why we had to scale down our guidance. Yeah.
Got it. All right. So I think, in quarter four, you'll have to grow by close to around 12-13% to maintain this guidance, which you have done in the first 9 months. So volumes, it appears okay. But on the EBITDA per ton front, sir, you had guided for around 850 rupees. Now, to achieve that, your quarter four EBITDA per ton may have to look like 1,050 to around 1,100 rupees. Do you think that's possible for quarter four?
Yes, that is possible because there are multiple factors with which we have been working on or considering. There are multiple levers. First, the volumes ramp up, that will give us additional contribution. Secondly, the Mukutban profitability is improving with each quarter, with the cost coming down and the volume ramping up. Third, we expect the Mukutban incentives also to kick in this quarter. So despite factoring in slightly lower realization to the extent of 3 to 4% for this quarter, we are maintaining our guidance of 850 rupees per ton.
Just to confirm that, last quarter you did 900 rupees of EBITDA per ton, 903 as you have disclosed. And for quarter four, it will look closer to around 1,100 rupees, going by the factors, the turnaround, the ramp up, the incentives, right? 1,100 rupees.
Yes. Because if you see from quarter two, we have increased EBITDA by 220 rupees. So compared to Q2 also, there was an increase of 220 in Q3. So with each quarter, we are able to improve our EBITDA.
So your improvement in EBITDA is also courtesy the cost-saving program that you had announced, right? Can you quantify for us how much has the cost saving been so far? And for the rest of the fiscal, how much can you eke out?
It has been in the range of 60 to 70 rupees. We expect another incremental 20 to 30 rupees in the next quarter.
In the 20 to 30 rupees incremental cost saving in the next quarter. What about in FY25? Any guidance for the next year?
It is a combination of cost saving as well as enhancements in our realization. So that impact will be close to, let's say, 100 rupees in the Q4.
Got it. All right. Mr. Saraogi, in the past you have said you're going to go to 30 million tons and you don't want to look at inorganic growth, at least for now. My question to you is, if you had to look at inorganic growth, and there are some on the west coast, there are some large, not large, 2-3 million ton units that supposedly are on the block. I don't want to name anything, but you have seen the stock market as well get a little bit excited about these assets. If you had to buy one of those assets, then what valuation would you look at on an EV per ton basis?
Currently, we are not considering any buyout. But
Yeah.
I would expect that any, depending on the geography, any deal around, let's say, $100 to $120 should be good.
Okay,
Per
100 to
ton.
$120. I just wanted your view on that. And final question before we let you go. What's the current debt on their books? You have capex plans as well. So no reduction, right, from here?
That's right. So
Got it.
in Q4, you will find some reduction from
Okay.
3,470 crores of net debt. We expect to close below 3,400. But next financial year, we are going to embark upon our next phase of expansion. So the debt might increase in absolute terms. But as we have always guided, on a debt to EBITDA basis, will always remain below 3 on a sustainable basis.
Okay, Mr. Saraogi, thank you for joining us and speaking to CNBC TV18. Appreciate your thoughts here. That's Birla Corp.